We're here to empower high-income earners to gain back control of your time through financial independence and stop trading your time for money and start letting your money work harder for you.
And hey, if you want to meet other high-income earners on their FIRE journey, join our High Income Earners FIRE Facebook group. Every month, we'll have guest speakers and we'll share about what our team is currently working on and allow you to share what you are working on with other high-income earners.
Hello, everyone. Welcome back to the High Income Earners FIRE podcast. My name is Cody. Today, unfortunately, Prag will not be joining us. And we don't have a guest today because we really want to focus on talking about what's going on in the current market in terms of stock market, in terms of real estate market. And also I'll be telling you guys what we've been trying to do to combat and continue to invest in the real estate market. And at the end, a little bit about what's going on with the FTX. A lot of you guys might be hearing about, FTX going bankrupt. What's going to happen to my crypto? Again, I only have one Bitcoin, disclaimer, already in cold wallet. So I will just give a little bit my 2 cents of what you should do if you have some Bitcoin still on exchange. Okay. With that being said, let's get right into it. The first topic is, how's the stock market doing? Right. So on my last YouTube video that I would just post a few days ago on November 9th, I talk about the set and done strategy, and a lot of good investor comes out and, or hedge fund managers comes out and claim that, hey, the worst has yet to come and we're expecting more recession and stock market going down in 2023 because of government continuing to print so much money. Now they're trying to reverse the money printing policy, taking money off the table. That might create a lot of liquidity issue in the market. And, the credit might dries up and people might not have money to lend. And to compound with that, the government continue to say that they need to raise the interest rate because the whole CPI, right, consumer price index, is not cooling off, even though, yesterday, November the 10th, when the CPI number came out, it was a bit lower than expected, and the stock market rallied 4.5%. That's a lot. That's one of the biggest rally in a day I've seen yet today, and really just by CPI a bit lower than expected. So what does that really mean to me, right? I can't see what everyone's thinking, but from that reaction is that everyone's waiting for a catalyst to start putting their money back into the market. Just so you guys know, a lot of people among my friends, among the high income earners, millionaires, business owners, and all that have a lot of cash and credit available, but everyone's kind of sitting on the sideline waiting to see when is a good moment to come in. They're waiting for the good news, waiting for that reversal to come. Okay. And I'm just being very honest with you, from, more than 10 years in the stock market. And now I have hundreds, actually over 1,000 students now. It's really hard to time the market. It's hard to time the COVID bottom. It's hard to time the 2008, the end of 2008 crash. It's really hard to time 2015 flash crash and 2008 and all that. There's always signs, but there's always so many noise in the market. So the best strategy is actually, if you don't want to put too much time into this, you're more of a long-term buy and hold investor, just put your money in every month. That's what's called cost average into the market, right? And you just put money every month, after you pay your gross income, how much you have left, put it in. Forget about it, right? Put it into a S&P 500, right? Which is the best 500 companies in US. If you're still bullish about that, most of you guys know that only invest in stocks in the US because I'm still bullish about it, right? You don't have to pick a ship, you pick the ship, right? And even Warren Buffett said that if he passed away and he cannot find a great successor for Berkshire Hathaway, he wants all those money from Berkshire Hathaway just go right into S&P 500 if S&P 500 has enough absorption rate to absorb all that capital. Okay, so that being said, it's hard to time the market. Now, secondly, I want to mention is that our said and done strategy I've been teaching, since December. Our alumni has a lot of success. The strategy is based on S&P 500 future index. We don't really have to time the market. As long as the market doesn't move too fast, we generate 1.5 to 4.5% consistently, and you only spend less than 30 minutes per day. Less than 30 minutes per week. So if you're interested in that, you guys can follow me, reach out to me, and just learn more about it, because I just upload a YouTube video on November the 9th. Okay, that's my take on the stock market. And I really think we're kind of in the bearish market rally, but we don't know how far it could go. So it's really hard to time the market. I still think there'll be a few more interest rate hike to come, but we will see a reversal and a bullish market in probably in the first quarter or second quarter of 2023. Okay. That's first topic. Second topic is, how's the real estate market doing? Now, real estate market is a very localized market. So I am in Toronto, Canada. My Canadian portfolio is all in Ontario, within 1 hour to 1.5 hour drive of Toronto. And from what I've seen is that the 1 to 4 unit, which is the small multifamily, the small residential, has been taking a hit, but starting to stabilize for the last few months in terms of price. Right? A lot of people try to sell their property, and if they cannot sell it, they don't want to lower the price. They end up just turning around and rent their property because the rent continue to go up. Okay, that's in the residential side. Now, even for the commercial side, the bigger than 4 unit multifamily, they still continue to raise and rent. So their valuation has been stabilized the whole time since the crash in March 2022 has been stabilized, and the price stabilized, and valuation is still very stable. Okay, that is still really strong. Now, how do we move forward in this real estate market? Can we still continue to invest in this real estate market? Yes, we can. We just have to be more careful, put in a little bit more buffer room in terms of your calculation. You want to make sure you can account for another 2 to 3 interest rate hike, and the number will still work, right? That's first thing. Second thing is, you want to make sure when you buy, you want to buy it right? Like, take example, right? Our business partner and I were moving to Southwest Florida. We just entered a contract for a newly built house that can bring a lot of cash flow as a short-term rental, right? The reason why it works with the high interest rate environment, not really high yet, but we're expecting that, is because the short-term rental can bring in almost double of the gross income of a traditional long-term rental. But we are still seeing, okay, not the lower end, we're kind of semi-luxury to kind of high end. We're sort of seeing the demand are kind of weakening, okay, especially in January. Okay, what does that mean? That really kind of goes into my next topic, is the middle class are diminishing. A lot of high income earners, if you only have one source of income, you are going to be a rare breed soon. Why do I say that? Because as interest rate goes up, inflation goes up, our income from our full-time job, whether that's T4 in Canada or W2 in US, cannot keep up with the inflation rate or the price of your investment. Like, for example, real estate, stocks, you cannot keep up with that, right? Your salary goes up by 2% to 10% per year, right? But the inflation is already at 7%. So a lot of people cannot keep up with that. But all the asset prices continue to go up. So what does that mean, right? People are not making more, but the asset continue to go up. So whoever already have a lot of asset will become richer, but whoever is still trying to buy their first property, buy their first stock, build their own real stock portfolio, are struggling. So the middle ground for the middle class in the past was what's really the backbone of a country are diminishing. Okay. And a lot of the middle class would get pushed down to actually the lower class, right? Don't get offended anyone. I'm just stating the facts, right? A lot of people are making great money, but struggling to kind of keep up with all the living expenses because of this. The middle class is diminishing, and I'm sure you guys can feel it, right? During this inflationary environment, gas price goes up, food price goes up, asset price goes up, everything goes up, but your salary did not go up as much. And once everything's kind of over and cool off right now, the price did not come down because all the merchandise, all the big box store knows that you're used to the price increase. So they're not reduce it back down to before the inflationary world ever again. So that's why the middle class are kind of diminishing. So what still works in the real estate market is you focus on either the necessity, the lower end of the rental, right? Like anything necessity about food, anything necessity about living, people need a place to stay. That will continue to be very stable, or the top end, right? Luxury, short-term rental, or anything that the wealthy, the ultra wealthy are spending money on, because they don't get impact as much as middle class people or lower class people in terms of income. They don't get impact as much in this inflationary because their assets continue to go up, so they can continue to spend. So again, two things: very luxury lifestyle, rental and all that, or the very necessity of that. Okay, I have both. So, I'm positioned really well. That's just my opinion. Okay. And last thing I want to mention is about FTX, right? The crypto exchange going bankrupt, filing bankrupt. Again, there's a lot of news going on. I cannot keep up with that. My team is all over it. But I just want to say, if you're outside of US, right, there's a chance you might not get your money back. So you have to react fast and get your money out into a cold wallet, and, potentially have to sell at a loss, unfortunately, all that. If you're in the North America, even though FTX Exchange said that they'd have all the backing from BlackRock and all these big pension funds, they could still go down because of the chain effect. Okay, so even in US, I know a lot of big YouTubers and a lot of influencers out there sponsor them and all that. But again, I hope everything's just a rumor and smoke. But if I personally own any money on FTX, I'll probably move out to a cold wallet and not have the chance of my money leaving on exchange and get locked in. It will take you years and years if you can ever get that money back. Okay, that's it for today. And if you guys like this kind of content, drop us a review and all that. And let us know what you like, what you don't like, so we can talk about it more. And today is the first ever episode on this podcast. I just run on my own without a guest, without Eileen. Hope you guys enjoy it, and I'll see you guys on the next episode.
All the links mentioned in this episode are included in the show notes. And if you love this episode, please leave us a rating and review on Apple iTunes. The link is also included in the show notes. And we would really appreciate your help in spreading the word to more high income earners on how they too can maximize both their time and money.
Also, if you still haven't joined our High Income Earners Facebook group, you are missing out on High Income Earners community, where we help each other reach our own version of FIRE.